Bitcoin got us to 126. So now we feel terrible at 65,000. I've held Bitcoin for 15 years. God bless the person that was able to do that. If you believe in something, you create a self-fulfilling prophecy.
Scaramucci begins with realism. His first point is that Bitcoin investors need to stop expecting a straight line higher. Bitcoin does not move according to emotion or wishful thinking. It moves according to cycles, liquidity, institutional behavior, and macro conditions. In his view, the market has been influenced by a number of hidden factors: China's crackdown on Bitcoin-related activity, a reduction in mining capacity, and the cascading selling pressure that hit the market in October. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
But I think you have to be realistic about Bitcoin. I think you have to be realistic about where we are. And a couple of things have happened under the surface. So another big crackdown in China. As you know, I'm just back from Hong Kong. The Chinese went around surfacing VPNs, etc., closed down a lot of Bitcoin mining that was happening in China. It was probably, 10, 12% of the mining going on in China. You saw the hash rate come down in Bitcoin. Some of that was related to them, pulling people out of the mining capacity in China. And then you had the cascade of selling in October. And the thing about that is nobody, Scott, you could talk to 5 experts, 10 experts. You can't get a congruent,
Can't get an answer,
right? So to me, then I'm saying, and this is just my supposition, my surmise, that we're in a 4-year cycle and that there were some traditional whales, some OGs that believe in the 4-year cycle. And guess what happens in life? When you believe in something, you create a self-fulfilling prophecy. So these guys looked around and said, okay, we're over 100. That's sort of a magic dot number for me. I've held Bitcoin for 15 years. God bless the person that was able to do that through all the different moves in Bitcoin. And they started selling into the $100,000 number. I actually think the cycle has been more muted by the institutional buying. And by institutions, I mean BlackRock or Fidelity or the 11 or 12 ETFs that are out there that people have stepped into and started buying. Bitcoin could have gone down more if you just look at traditional cycles. So I'm in the camp that we're in a 4-year cycle. We're going to chop for a while. But by the 4th quarter of this year, you'll start to see the traditional move that you get. And I think, and I think if you look at the whales, they're buying down here again.
Yeah.
At these lower numbers.
Well,
so I've been buying, and I don't know if you've been buying
like crazy.
Yeah. So my attitude is, Sailor's the most aggressive. He's got a $13 million price target. I think Skybridge, we have a, $32 million price target. We think it gets there by the end of that. That's 6 years from today. It's another halving and into that cycle. And so if you get the opportunity to buy it here, buy it. But I think what happens in our industry, we want everything yesterday. So Trump comes in, whatever you and I both think of him, he's perceived as pro-crypto. We get a big run. There's positive crypto regulation coming. Atkins is pro-crypto. All of that is good news. And so people were expecting in 25, myself included, and I got it wrong, 150 crypto. It didn't happen, and now people are in the doldrums. And so you can't be in the markets like me for 38 years and see a greed fear index, which is 0 to 100 at 5. So you have the fear index is at 5 and be overly bearish. You can't as a person in this industry, because I can tell you that's when you're making your money. Okay. You go to Davos, Switzerland in 2007, we're growing right to the moon. And of course, we had the 2008 crash. You get to Davos in January of 2009, we're going into the earth.
Yeah, everybody's going to zero.
And then you have a 10-year bull market. So I would just tell people these levels, could it trade lower? Sure, anything can happen. It's Bitcoin. But we're getting close to the bottom. So it's such a good point. So let me provide more evidence. I'm going to take you back to the first quarter of 23, where we were all annihilated after FTX. Bitcoin was cratering in January, February. And then all of a sudden, the Silicon Valley Bank looked like it was going to fail. Government had to step in, and you blipped 5,000. You went from like 22 to 27,000 on your way to the low 30s. And everybody was looking around saying, how the hell did that happen? And so it was at a period of great disinterest and great apathy that the bull market started again. And I think we'll get there. Now again, I've talked to a lot of people in this room. A lot of people say, no, you're wrong, Anthony. We're going to go way lower because nobody is floating in the Bitcoin ocean. Where's the blown out trader, the over-levered guy that got taken out on a stretcher? But I don't think you're going to see that because of the introduction of the ETF. If you said to me in January of 2023 that Bitcoin was going to be 65,000 in February of 2000, I would be so excited. Well, that's Bitcoin. Bitcoin got us to 126, so now we feel terrible at 65,000. And the truth is, you own Bitcoin. So I owned one Bitcoin before the rally. I owned one Bitcoin during the bear market. Frankly, I bought more Bitcoin, but I'm making the point, you own Bitcoin, stay the course. Let me talk as a former private banker, right? I can tell you that there's an ease of use on Wall Street. And let's talk about the people that have the money. The people that have the money are 60 plus. They're the baby boomers. And when you came out with a Bitcoin ETF, you're like, oh, I can call Morgan Stanley, I can call Merrill Lynch, buy me the Bitcoin ETF. Those people, even though it's very easy for you or me and very versatile, they're not going on Robinhood, they're not going on Coinbase, they're not doing it. But if they can call their broker, or I can call my private banker at JP Morgan and say, hey, buy me 500,000 Circle USDC, and USDC is yielding XYZ, it's very easy. In other words, the easier you make it for the richest group of people, the more adoption you're going to get. That stable coins, I hate to paraphrase Giancarlo, but I think he's giving you a good point. Stable coins are going to do well. You got the Genius Act in place. There'll be more market share of stable coins. But until the banks can have their own stable coin or be able to have Circle or Tether in their custody, they're not going to scale to the extent that we would all want them to scale. So you do need this second leg of the legislation to happen. And, Tom Emmer said to me, and he was really pushing last year to try to do both at once. And that would have been way better for all of us here in the industry.
Scaramucci also argues that institutional participation has muted the downside. In prior cycles, Bitcoin might have fallen much harder, but the presence of major institutional vehicles, such as BlackRock, Fidelity, and the Bitcoin ETFs, has changed the structure of the market. There is now a more durable base of demand. Even if Bitcoin chops around, the market may no longer experience the same type of collapse that characterized earlier eras.
And that could be the reason why it doesn't get done, but offsetting it is fair shake.
Yeah,
money. And when I call the crypto corporates, because fair shake and the crypto corporates could spend $500 million on the midterm election. And remember, they spent $40 million on the Sherrod Brown election in Ohio.
Yeah.
And he was he was a three-term veteran. And you know this, but three-term veterans have like a 95% re-election rate. And they dumped the money, grassroots campaign, negative campaign. They knocked him into center field. And I don't think the younger Democrats are going to want that for themselves. And I think the thing we learned in 2024, and I don't know if you would agree with me, but there's no anti-crypto voter. Elizabeth Warren says we're going to have an anti-crypto army. Why? There's pro-crypto and there's single-issue crypto voters, but there's no anti-crypto voters. So if I'm your consultant and you're the candidate, I'm like, give it up, man.
Just shut up.
Give it up. Nothing. Just be neutral or pro-crypto.
Yeah, it makes no sense. But interestingly, it feels like the anti-crypto army, not on the voting side, but in politics, is peeking its head out again.
Exactly.
Because of Elizabeth Warren.
Exactly.
But I think they've been emboldened by Trump's participation in the industry itself, and they see that as a potential political, hot potato.
If we're being objective, he heard, I was on a panel in Davos, Switzerland with Brian and Jenny Johnson, January 2025. And he had just launched his meme coin. I said, guys, this is going to hurt us because a regulator or a Democrat in opposition to the president is going to be miffed about this and is going to want to not vote for him. Not going to want to give him a win on something. See what I mean?
Yeah.
So he weirdly is a pro-crypto president, but that sort of stuff, too much backflow on the industry, too much backflow.
Yeah, I mean, that's what's led to my belief that clarity is less likely to pass, because I think the Democrats will want that ethics clause and he ain't signing it.
I think they're going to cut him some slack on the ethics clause because they don't want to go up against fair shake. That's my prediction.
Amazing how politics.
Well, it's about the money, man. Follow the money, man. Follow the money.
It's just like that. Isn't
I
that what we were all here to,
I could be wrong, but I think that's what's going to happen.
Exit. Wasn't that the promise of Bitcoin was to not have to do it?
I mean, that's what happens in life. Your ideas, as great as they are, they come in contact with the world. They come in contact with reality, right? Like what Mike Tyson says, you got a plan, then you get punched in the face. That's up. Or, Eisenhower said, well, we got a battle plan. And then the 82nd Airborne, they landed 35 miles off the battle plan. And they had to fight their way out of a 360-degree perimeter against the enemy. But they figured it out, and so we'll figure it out.
Scaramucci also argues that institutional participation has muted the downside. In prior cycles, Bitcoin might have fallen much harder, but the presence of major institutional vehicles such as BlackRock, Fidelity, and the Bitcoin ETFs has changed the structure of the market. There is now a more durable base of demand. Even if Bitcoin chops around, the market may no longer experience the same type of collapse that characterized earlier eras. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.